A very good afternoon to one and all present here. May I request the dignitaries to be on the stage. It's my privilege to stand before you all to welcome to this special program on emerging trends in FinTech and CTBC, which is organized by the Department of Banking Technology in association with Reserve Bank of India. So I now welcome all the esteemed guests, professors, officials of various banks, scholars, and students. And now I request everyone to rise for the university anthem. Thank you. So without further delay, let's move on to the schedule. So with great pleasure, I would like to welcome our Honorable HOD, Dr. V. Mariappan Sir, to give away the welcome address.
So good afternoon to all of you. Very happy to see the heavy rains and unfriendly climate. I'm very happy to see all of you in this auditorium. First of all, we are all assembled here for an important program for any student of management. We will be discussing about emerging trends in financial technology and central bank digital currency. Both are the latest initiatives of the Reserve Bank of India. And we have right away from the RBI senior officers to talk about this subject. And a lot of discussion is going on about central bank digital currency. A lot of confusions are also there in the minds of the students, how it is different from the regular digital applications that we are using offered by the banks. How central bank digital currency is different from the digital alternative channels that are offered by the banks across India. Similarly, FinTech is also growing, and most of the banks initially threatened by the FinTech products offered by FinTech companies, but later on come into terms with that and started partnering with the FinTech products and organization, because it is very important in strategy. Instead of looking somebody as an enemy, look at him as a partner and try to grow each other. That is the best way to go forward. So that way, banks are also realized that FinTech is not really a threat to the banking institution. Therefore, they also started looking at that very positively. But indiscriminate growth of FinTech with less regulation also led to a lot of confusions and a lot of complaints from the users and the consumers. So ultimately, Reserve Bank of India, as the custodian of the financial system in India, it is their responsibility to see that all the stakeholders are taken care of and their interests are safeguarded. So that way, very recently, Reserve Bank of India has also started a separate department for FinTech, and very happy to say that the FinTech newly started department is now manned by one of our own alumni from banking technology. Right. So that way, we are having two important guests from Reserve Bank of India. Before that, we will be listening to our leader of Pondicherry University, who inspire all of us and have been very supportive to all the right kind of initiatives taken by the university since his takeover as the Vice Chancellor. And he has got a very soft corner for Department of Banking Technology and very particular and in general for School of Management. Therefore, we have our Vice Chancellor. So on behalf of the Department of Banking Technology and on behalf of the School of Management, I welcome you, sir, for sparing your valuable time. And despite having a lot of assignment today, this program was finalized just 2 days before, and we just pulled down all our possible efforts and made this to happen. So that's why very short notice, we have also not able to reach out to large number of audience in the campus, but with whatever the time available, we were able to make it possible today this program to happen. Sir, on behalf of the entire team, I really happy to have you, and our students are eager to listen to you. Over the period, I think last 15-20 minutes, he has asked very serious questions to the RBI people. In the last 10-15 minutes of discussion informally we were making. I was wondering, a chemistry professor has got so deep knowledge, even sometimes we banking technology and banking people and the Reserve Bank of India has to trust their mind to answer some of the difficult questions he has asked. So thank you very much for not only making your presence available, but also asking the pertinent and right questions so that this program will go forward. And there is no mention to talk about the Dean School of Management. Madam has been very, very kind and very supportive for all the efforts of our department. And she has got, in difficult times, she stood with the department in resolving some of the serious issues facing the department. And she has been guiding, she has been supportive, she has been helping us in very many ways. And we are happy to have Madam just landed after her tour today morning. She was surprised when we said we are going to have a meeting at 2 o'clock and 11 o'clock earlier. So suddenly it was a surprise for her. Madam, with a short notice, happy to have you with us and taking this program forward. I welcome on behalf of the Department of Banking Technology and students, scholars, and faculty for this program. Thank you, Madam, for your presence here. Most importantly, today's program is going to rest on two important people, one of whom I already mentioned is Pride of Department of Banking Technology, who passed out in 2011. And first time the Reserve Bank of, maybe the last time also, the RBI came for a campus placement and took Mr. Murali. Right. He is sitting here now. From an officer, he rose to the deputy general manager and heading the FinTech department. Fortunately, we also started MBA FinTech in the recent year 2020. 4 batches have gone out. So I'm he's our proud alumni and happy to have him today on this occasion to and we are looking forward, and he is going to give you a very detailed discussion about the regulatory aspects of the Reserve Bank of India's perspective to put the FinTech applications. Many are coming left and right, and many of them are not getting regulated. So he is tasked with bringing out regulation for FinTech organization in the future forwards. Therefore, in future, any user will have a very complete peace of mind while using this product. So I welcome Mr. Murali Machala for this program, and thank you very much for sparing your valuable time and recollect your memory coming back to this campus and making us proud on this occasion. Thank you very much, Mr. Murali, for this occasion. I welcome on behalf of the Department of Banking Technology. And another guest we have, who is again Deputy General Manager from Reserve Bank of India, Mumbai. Another important initiative taken by the Reserve Bank of India is to introduce a central bank digital currency, because lot of discussion is going on, and because the custodian of the Reserve Bank as a custodian of Indian financial system, the most difficult part is to handling the economy. In the economy, there is a lot of good things are happening and a lot of unpleasant things are also happening. One of that is the shadow economy. How many of you know about shadow economy? Google it, you will understand. There is to the real economy, there is also a equally shadow economy is practiced in India that eats away the real economic progress that we are making. And therefore, and that shadow economy is happening because many times we deal with the physical currency. Corruption is one of the greatest challenges the country is facing today. Like terrorism, corruption is the another difficult thing to deal with that. So to deal with this shadow economy, to deal with this corruption, to deal with the terrorism, because many times terrorists are funded by money collected illegally. So how to curb all these things? The one single medicine for all these things is the digital. Digital is the only thing that doesn't discriminate, that you cannot hide. So one of the reason for digital push for the government of India is to create a account for every Indian and bring digital currency to the system, thereby slowly doing away with the physical currency. That is the only solution to do away with all the ills of the economy. Therefore, in that respect, the latest initiative of the Reserve Bank of India is CDBC. So he is heading now the central bank digital currency, which is very, very important initiative. Sir, on behalf of the Department of Banking Technology, School of Management, I welcome Sri Sirin Kumar Sir, DGM, Reserve Bank of India, to join with us. And apart from that, another senior officer from Reserve Bank of India is also sitting here, Mr. Vinod Kumar, AGM. He earlier worked with payment and settlement at Chennai office. Now he is attached with the Mumbai office, dealing with the FinTech as well as CDBC. So thank you very much for making your availability on this occasion. And apart from that, we also have very joined by our Indian Bank Zonal Manager, available with a short notice. Thank you very much, sir, making your presence available. We also have DGM from Indian Overseas Bank, Sahu sir, is available here. So we have filled with a lot of, apart from that, we have faculty members of faculty, heads of the department, and research scholars, and most importantly, the beneficiaries of today's special session, students across School of Management, available. I welcome all of you on behalf of the Department of Technology this occasion. This next 1.5 hours discussion on these two topics definitely is going to be an enrichment, right? So you will have a lot of credit to your brain account. 1.5 hours, you can debit it whenever you want it in future, right? So thank you very much, and I welcome all of you on this occasion and making it available for this program. Thank you very much.
Gratitude is one of the greatest virtue of all human beings. So, to express our recognition to the contribution and the sacrifice and the valuable time that is given by our distinguished guest, we now like to honor our distinguished guest. Now, I request our Dean School of Management to honor our Vice Chancellor. Now, I request our beloved HOD, Dr. V. Mariappan sir, to honor our Dean School of Management. Now, I request our Honorable Vice Chancellor, sir, to honor our guest speaker, Sirin Kumar sir, DGM, RBI. I request our Vice Chancellor, sir, to honor our next guest speaker, Muralidharan Manchala, DGM, RBI. Along with that, we like to honor our special joinees for this event. I request Mr. Vinod Kumar, AGM, RBI, to come over to the stage. I request Dean Ma'am to honor us. Next, I request Mr. Ravi Shankar Shahu, DGM, Indian Overseas Bank, to I honor Dean Ma'am to honor. Next, I request Venkata Subramaniam sir, a zonal manager, Indian Bank, to come over to the stage. I request HOD sir to honor. Now, the School of Management is the proud of the Pondicherry University. It is one of the oldest and largest school and grown over the years consistency. It is our biggest school of management, which is under Pondicherry University, with over 2,000 students enrolled, about 15 postgraduate and doctoral programs in recent years. And in recent years, it has shown phenomenal growth in terms of academic excellence, research expansion, and introduced innovative interdisciplinary programs under the NEP 2020 guidelines. So we have a leadership of a dynamic dean and mentor, Professor Malavika Dio. She is one of the few professors who have grown along with the university since its inception, and she has contributed immensely in the field of finance and commerce. Her research contribution and quality of publication is the testimony for her academic professionals, and she has also served as financial officer in charge at Pondicherry University, and besides that, she has been member of various academic and administrative committees in the Pondicherry University. It is a pleasure to have such a leader in our school with us. And now I'm very pleased to welcome our beloved Dean, Professor Malavika Dio, to deliver the felicitation address.
A very good afternoon to all present here. Respected Vice Chancellor, Pondicherry University, Professor A. Dharanikaru, two DGMs of RBI, our special guest today, sitting on the dais, my colleague, Professor Mariappan, Head of the Department of Banking Technology, the top officials from IOB, Indian Bank, and other banks here, my colleagues from School of Management, from Department of International Business, and Department of Economics, and other departments, along with the banking technology, all the faculties of banking technology, and some of the enthusiasts to know about what is happening in the financial system. From Science Department, Madam Lata Shukla, and my dear students from School of Management and other departments, all guests, it's my proud privilege and of my happiness that I am standing before you representing the School of Management and also the Department of Banking Technology to invite two very important persons who can talk about what is happening in the financial system, the present day world where technology is in a horse galloping stage, where there is no looking back, there is no waiting, there is no stopping. If we stop, we are left behind. If we don't, if we look back, we cannot proceed and compete. Hence, we are in a galloping stage, and Indian economy, being one of the largest economy, has very aptly taken up digitalization, and it has been recognized as one of the fastest country which has adopted digitalization next to China. Almost 87%, the growth is almost more than 87%. Of course, the digitalization which has given rise to the FinTech, as well as the digitalization which has made our country to think of a digital currency, are the topic of everybody's interest. Hence, the two top officials from RBI, the topmost regulator of the financial systems, are there to educate us about what are the pros, what are the cons, and what are the modalities of operations. And definitely, there is lot of takeaway from these talks today, as we know that the become the order of the day, and it is nothing but the mobile application and other technology created to improve and automate the traditional financial system. Of course, it improves, it supplements, it complements the financial system in terms of a range of financial services, not only the payments, receipts, deposits, it also helps in investment, wealth management, capital market operation, blockchain operations, etc., etc. a big, this thing, whatever you name in financial services, it comes under this fintech and under the digital currency. And of course, it has facilitated the financial system. I told you that it complements the financial system. At the same time, the hindsight of it, it has complicated the financial system a lot, because many people do not, though they use digitalization, they are the users of digitalization, but they are not knowledgeable, or they do not know how this digitalization happens and what are the intricacies of it. And without knowledge, when we use, if you give a blade to a monkey, it will not shave, it will cut. So it is like that. Once, without much knowledge, when we use these things, many a times, not sometimes, a big cut happens which frightens others. It is not that always there is a cut if you have a blade, but when it cuts deep. It doesn't show much on the top, but it goes deep. When we cut in a blade, you know how the cut is. Outside, it looks just a scab, but it goes deep. Similarly, the scams that happens because of all these frightens. Hence, there is a need for regulation. As you know, these fintech companies, fintech institutions, different types of institutions which are involved in providing financial services digitally need to be regulated. There is a need for regulation. Hence, till now, they had come and mushroom growth was there. People have started adopting, people have started using, but relentless growth of this has made people to think over, and the regulators to think over how to regulate and how to make it to a system so that people will not be frightened. Now, if we want to be 100% digitalized, there is a need that people fearlessly should be able to use. It is not that always with an apprehensions. So there is a need for the making it systematic. And as you know, the cryptocurrency also is making big wave. People are also skeptic about use and misuse of cryptocurrency. That is the reason, again, the RBI has thought of, as already the head of the department was telling about the shadow economy, the corruptions, the terrorism, the dark aspect of the physical currency, usage of physical currency, digital currency had to come up. There is no other go. So how it will be used and how it will be regulated and how the modalities has to happen, they are also things to be known. As sometimes back when we were talking, there was a chat with these officers, we were telling that many things, many regulations are there in place. The government is thinking of bringing lot of regulations and lot of monitoring of these institutions. But unless people know, it is of no use. When there is a law, laws should be, people should know about the law, people should know about how to use and how to take rescue of or recourse of this law. That is also important. If law is there, but we do not know that these are the things in place, we just keep crying when we are in distress. So we need to know about what are the things that are there in this, and these are all emerging issues, emerging trends, in emerging developments in the financial system. Hence, today is the very eventful day that we have two officers from RBI to talk about the fintech as well as the digital currency. I welcome you all, sir, and I'm very happy that Department of Banking Technology has taken lead to call these two people. It is not only for the financial technology, it is not only for the MBA FinTech or MBA Banking Technology student, it is for the common man, because these are the things used by everybody. It is not specifically for maybe BT students may be getting a job because of this, but by knowing this, but it is for every common man. So I'm happy that they are there among us to talk about this. I congratulate the department and thank you very much for giving a place to talk about whatever I thought of. Thank you very much.
I hold it for 30 seconds. I request all the students to stand up. Students. Give, fine, okay. Then I leave it to you. I want you to give a big round of clap. I'll tell you why. Madam has served 37 years of long service with Pondicherry University. She has started her career along the university when it started in 86, and Madam is retiring this month. So there won't be any better occasion for us to give a tribute to her contribution to the students of this campus. We may not get any other opportunity. All the students assembled. I thought just like I asked permission from her, I'm doing it. Thank you very much, Madam, for helping the university and also the students community throughout your life. Thank you. Thank you so much. Appreciate all of you.
Thank you, ma'am, for your inspiring speech. You will be always a role model for all the students and the professors also. A leader is one who knows the way and goes the way and shows the way to get success. The success of any higher educational institution depends upon the visionary leadership and the leader's ability to think ahead of the time, besides inspiring and initiating innovative futuristic programs. We are fortunate to have such a leader with us to lead our university. The university initiated many new activities in the right direction under the leadership of our present Vice Chancellor, Professor K. Dharanikarsu sir, that resulted in expansion of activities in the campus. Besides a rejuvenated atmosphere, the university has also introduced diverse academic programs, including successful implementation of NEP 2020. Professor Dharanikarsu sir is an outstanding academician with a vast experience of 24 years in teaching, research, and administration. He began his academic career as assistant professor in the Department of Chemistry in the year 2003 at University of Delhi. Later, he joined as professor in Pondicherry University. He was a recipient of Korea Research Foundation, Japan Advanced Institute of Science and Technology, and JSPS postdoctoral fellowship. Sir is an ardent researcher and published over 70 research papers, besides book chapters, and shared research resources and expertise in many national and international conferences. He also done many minor and major research projects funded by different government agencies and at different government departments. Now, may I request our Honorable Vice Chancellor, Professor K. Dharanikarsu sir, to deliver the inaugural address.
Thank you for the nice introduction. I thought you will be discussing chemistry also. That's why I stand up. So I know chemistry for MBA is very difficult. Anyway, respected Dean, Professor Malavika Dio, and Head of the Department, Professor V. Mariappan, and today's special address speakers, Sri Shireen Kumar, DGM RBI Mumbai, who is going to talk about latest trends in central bank digital currency, and Sri Muralidhar Manchala, our alumni, who is going to talk about emerging trends in FinTech, who is DGM, he is also DGM RBI in the field of FinTech, and all the Vinod Kumar, AGM RBI, then IB Journal Manager, and IOB Regional Manager, and all the faculty members, students, scholars, and ladies and gentlemen. Good afternoon, everyone. So you can understand now how difficult to work with Professor V. Mariappan. Suddenly he arranges and makes sure that students are there and pulls me also here. It's good. Always he put me always very difficult situations. Not only this. So when he had a very tough situation for PhD admission, so I took much time and also in detailed discussion. So I think now it is resolved. Students are also joining now and taking this. So I can proudly say I played a vital role here, not to violate any rules. Without violating any rules, how best we can help the departments, because banking technology is a very unique program. So unique people need unique way to handle this situation. That's why we have handled that. Also benefited many departments, because in NEP we are going towards interdisciplinary. So this will pave a way for any department, any new program whenever we start. This how we are going to give degree for PhD degree for those type of students. This will be the very useful. So thanks to Professor Mariappan. So another issue he came also, the BSMS, BTech MBA. No other department is proposing BTech MBA. So the interesting thing about the management is whatever the proposal give, they say yes, we'll do it. Whereas the science, arts, they say let me see whether we can have any workload increase, or whether teachers will support me, but I will be as a HOD, I may be the unpopular HOD since I am starting the new course like this. Whereas this is the mindset of the humanities, social science, even science also. Whereas the good thing about management is whatever the new program, they will see the opportunity, not the issues related to this. So that's why they are. I always say they are the people who lead the university, and with light in their hand. And anyway, they are also, they are, of course, they are business managers. So they are doing their job, but still it is university is benefited. If the management department is not there, I can say as I am 1 year I am managing. See, I have taken lot of help from this department, because in the other departments, if you go and ask any other than teaching and research, so they have hesitation and they have to take care of their family. That very they are not ready to share their time, precious time for the university. Whereas it is always opposite when it comes to the management. So whenever there is, it is running the university without the help of teachers is not difficult. Forming a committee, and even now, just today, our university was appointed as the nodal university, since ours is the central university. They attach 3 universities, neighboring universities like PTU, Annamalai University, and one more university as the state universities, who for them we are going to help them for implementing NEP. So Ministry of Education appointed our university as the nodal university for giving guidance to the university. So they asked us just 1 hour ago, they asked us appoint some nodal officer to do this, because they are going to convene a meeting on 19th. So we have to say what are the measures you are taking. We are discussing with those university how we are going to implement all those things. The moment the nodal officer, I asked whether please ask Professor Mariappan can help. So the moment I asked, he helped. He said, yes, I'll do it. So if you go to some another department, they will say, no, I am busy, like this. So this is the thing I am telling. So like this, there are, as being a central university, there are a lot of responsibility for us. And every time international universities and their vice chancellor or president, they come here and then they discuss with us, going for the MOU, all those things. It is a vibrant university. That's why more than 99 MOU we have, because it is not related to anything related to only teaching or research. Other than this, so there are many beneficiaries because of this. When the university is in the stage, whatever the stage, you may be having, there is room for improvement. Whatever you have, it is not the ministry which gives everything. Ministry gives only money, direction, statues, that's all. It is it is we are doing, and it is sheerly our teaching, non-teaching staff, hard work, it has come to this stage. So I always say, if you spend 1 lakh rupees of government money, you have to work for the work which takes care of 1 lakh rupees. So whatever the work you are working for 1 lakh rupee to earn, same work you have to do the background work. That much work we have to do in the background. So if this building is there, so our officers would have worked for this. That is the way our university is here for more than 40 years. So in that aspect, I am just telling the management department. There are stories. I don't want to take much time. How management department formed, I used to get the stories, how they formed this management department, the first vice chancellor, all those things. So it is everything the pain. Same thing. The Professor Mariappan mentioned also the our honorable and respected dean is retiring this month. So I am also equally pained and also what to say, helpless, because she is helping university in many committees. So when it comes to the person who should be a woman professor, it has the more role. So we used to go to her and then tell her to help, and senior as well as woman, she used to help us. Very important committee like IC, so internal complaints committee, she is the chairman of this. IC is very difficult to handle. So any sexual harassment complaints, as per rule, it will directly go to her. It will not come to any of even the statutory officers. She used to handle directly and convene a meeting and take the decision and give it to us. So in a way, she was playing very positive role and helping the university. So we also feel handicapped when she retires this month. So I also take the opportunity to thank her and for this, whatever the help she has done. So let us not make her more emotional, feeling that she is going to retire. So this is actually, I feel this is the good development. And when anybody retires with this accomplishment, this is actually achievement, instead of seeing it as for us it is loss, for her it is a great achievement, work for the university, central university, and being worked for the positively, and retiring as a dean is a great privilege, I feel. So in that way, I also take this opportunity to thank her. Now coming to this, the emerging trends of FinTech and CBDC, Professor Mariappan mentioned, I had a long discussion with both the special interest people. Those discussion I don't want to discuss because you feel confused. So you are all now settled for something. because my question was related to what is the role of rupee, correct? Why you are bringing the rupee where it is not playing a leveling field? So I always feel bankers don't like this, but I always feel when something wrong security related happens in the area, then I always blame the police station. Police station is the responsibility of this. If something health related is not correct, that means that particular health center is not actively doing it. So they have to do the survey, make sure that all are healthy. That is the responsibility. If same thing, even the teacher, if somebody fails in the class, I feel it's the teacher responsibility. Why you are not taking the remedial class? That's why NRF also they give. If the outcome is less, that means your university is not performing well. Same thing when bankers, if non-performing asset is there, it is a banker's responsibility. It is the RBI responsibility. Why your rules are allowed to for this? So if the even Professor Mariappan is mentioning about shadow economy, so who is responsible for this? So it is the RBI's responsibility. That is the reason we were just discussion in between four wall. So we don't want to discuss, make you confused also. So we are here to discuss the positive things. It is about the emerging technology. So we can't avoid now the FinTech and CBDC and how we are going to benefit out of this. So if you see this overall, the money always very difficult for the public to understand. Earlier it is only exchange of whatever the things I have. If somebody working in our home, I will give you some things. They will take the things and then lead the life. But later on, the money introduced, then this money always is always the how to use this, how to preserve this. So, what is the role of bank here? What is the concept of interest? And what is the budget? All those things very difficult for the public to understand. So this is always there, but now it is going in the another direction where then technology also introduced in the bank, where it becomes more complicated for the public to understand. So in that way, your role is very important as a banking technology student. How we can take this to the public without understanding what is this, and you cannot take this to the public. So that is the reason here today they have arranged about the fintech and CBTs. I also discussed with the DGM RBI the difference between CBDC, and then you may be knowing it, but I don't know. I am a chemistry graduate. So, what is the difference between CBDC, cryptocurrency? Who is regulating cryptocurrency? And what is the advantage of CBDC? Why CBDC is still anonymous? Why not we make the name? So it is very easy, if you put name of CBDC, make it the more 50% should be CBDC in name. Then shadow economy can easily be controlled. But why government is not doing it? All those things we discussed. Hopefully, they will give the very good insight into the central bank digital currency as well as fintech. So I thank Department of Banking Technology and Reserve Bank of India for jointly organizing this. Special thanks to Sri Srin Kumar and Sri Muralidhar Manchala for having agreed for this. I know so they have to be there, but they took time in the working day. They took time here to come here all the way to Mumbai. Hopefully, Murli there played major role here to come back here. So I thank Professor Mariappan and Professor Malavika Deo for arranging this wonderful talk for the students. I thank one and all for inviting me here. Thank you.
Again, I intervene. Sorry for the disturbing the whole flow. I again repeat only the students. Repeat only the student. What is it? Repeat. I'll tell you why. Only the students repeat. This is for our Vice Chancellor. I'll tell you why. Because you stand up. The second years now are sitting in an air-conditioned classroom. Yes, do it again. For 2 years, things were not happening. We had a discussion and he has sanctioned air conditioner, 11 air conditioners, and you are all sitting here. Right. Then one more thing, you are all going to have a, sir, please, it's my prerogatives. My students, you are all having a, going to have already orders are placed. Thanks to him, FinTech students are going to have an exclusive, this is a, he has agreed to have an exclusive computer lab, another 55 lakh rupees he is going to sanction hopefully for you, FinTech computer lab. Already other issues, he stood with us to resolve some of the difficult problems. I fought it, he stood with me, we resolved it. Thank you, sir. And okay, now you can see. Thank you. Sorry to disturb the flow. Now you can take.
Thank you, sir, for your inspiring, enriching, and thought-provoking inaugural address. Now, I take the privilege to introduce our chief guest and speakers of today's program. Mr. Sirin Kumar, currently Deputy General Manager at Reserve Bank of India, is a banker with about 20 years of experience. He has completed his Masters in Management Studies in Systemic Risk course at the Yale School of Management. He has started his career as assistant manager in State Bank of India in the year 2002. He has joined Reserve Bank of India in July 2005. His specialization includes regulation or supervision of commercial banks in India and operations in financial markets as a treasury dealer. As a dealer in the financial markets department of the RBI, he is involved in conducting monetary policy operations and carrying out foreign exchange intervention of the Reserve Bank of India. He is also a member of faculty at the Reserve Bank Staff College since April 2007, and currently he is heading the Department of Central Banking Digital Currency of Reserve Bank of India. Thank you, sir, for accepting our invitation and for your valuable presence. Next, Mr. Muralidhar Manchala is currently holding the role of Deputy General Manager at Reserve Bank of India, Mumbai, and sir has completed his MBA in our beloved university, Pondicherry University, and he has 13 years of experience in banking industry. He has joined RBI in 2011 as Assistant General Management at Hyderabad. And currently he is working as DGM, heading the FinTech department in Reserve Bank of India, Mumbai. His specialization includes business intelligence, information security, service-oriented architecture, and payment systems. And Sir has also undergone various projects, for example, a study on financial systems for the poor and an analysis of payment system, which include your RTGS, NIFT, and mobile payment systems in IDRBT Hyderabad. Thank you, sir, for your acceptance and valuable presence. Now, I leave the floor to the guest speakers. So now it's your time, sir. You can start with your speech. Thank you, sir.
Good afternoon, everyone. Professor, Vice Chancellor, Professor K. Dharanikarasu, Dean, Dr. Malabika Dev, and Professor V. Mariappan, HOD Banking Technology, School of, and all the deans and other senior professors of Pondicherry University, various departments, general manager from Indian Bank, IOB, all the bankers who are present here, students, and everybody who are associated with this, arranging this workshop. Thank you very much. I would like to thank the university, particularly Professor Mariappan and my colleague, Mr. Muralidhar, who is also alumni, for coordinating this and arranging for this session. It's a very, very important for us. And my team, Mr. Vinod, who is there for arranging from the banker side and all the activities we have done. So, I mean, it already feels like a big event actually today. We were thinking to have a knowledge session, but then it appears to be a very, very big event from that manner, and we had a lot of things already. Now we will come to the subject of the session today. To start with, I'll have on the CBDC, and then my friend Murli will cover related to fintech regulation and other things. Already there were some very tough questions which the vice chancellor has asked me while our discussion. He extracted the full money for the coffee which he gave it to me. But really, I was very, very happy to know that. I mean, this kind of these are the basic questions, and it's a learning for me as well. That what are the issues which are happening from that level, which sir is able to see, and it is very nice to know. And we need to come out with solutions for those things. Having said that, I'll start with something which he asked me for the audience. I'll ask you some questions and then probably start to answer those questions. So the first question I would like to ask you all is that uh, how many of you have used cash, physical cash? All of you. How many of you have used digital money in some way, like for example, internet banking, mobile banking, UPI, or something? Again, all of you. What is the difference? First, what is the difference between the digital, the cash which you have used, the bank note which you have used, and the bank money through our internet, mobile, or UPI? What is the difference between these two? Anyone, please come forward. Please be interactive. So, sorry. Oh, so you are highlighting the digital part, the physical and the digital part. Thank you, ma'am. Apart from that, what other things, because you all are the students, I think from the banking technology, I'm sure you understand these things. So what is the basic difference between the cash which we use on a daily basis, on an accounting basis, and the money, the internet banking, UPI, or any other money which you use on an accounting basis? Just to give you, drop you a hint. What is the difference? Sorry? Transaction data. Anonymity, you are saying, you're highlighting that the transaction data in what? Okay, so your data is getting recorded there, but when you're doing with the cash, it is not getting recorded. So there's an anonymity while using cash, is what you're saying. Okay, but on an accounting perspective, what is the difference? Sorry? Cost of printing the money. So in the cash, there is more higher cost which is involved in printing the money. That's what you're trying to highlight. Okay, again, I'll repeat. What is, on the accounting basis, what is the difference between these two forms of money? Yes, someone? So again, I'll give you a further hint that the money which you use for internet banking, mobile banking, UPI, etc., is a liability of which entity? And the cash which you're using is a liability of which entity, and who guarantees that? Sorry? One of you can clearly, whoever is clear about this, can just. Sorry? RBI governor's liability is okay. So RBI governor's liability is the cash. What about the okay? So what again? So now let me not spend more time. Yeah. So so the physical cash which you use is represented in the Reserve Bank of India balance sheet as a liability. It's a RBI liability. RBI has issued that currency. It is guaranteed by the government, and it is mentioned in every note that that is issued by RBI, signed by the governor, and all those things are symbolic. But the important thing, it is a liability of, it's a promise, it's a guarantee of the central bank to provide you that equivalent amount of money. That is the liability. That piece of paper provides you that assurance, and on the basic accounting wise, it's a liability of the central bank. Whereas when you use internet banking, UPI, mobile banking, etc., of a commercial bank, it is a liability of that particular commercial bank. It can be Indian Bank, it can be Indian Overseas Bank, it can be SBI, HDFC Bank, but it's a liability of that commercial bank. Now, if you understand the historical perspective which I was discussing with sir, so earlier there was a barter system, and then initially the currency could be exchanged at gold. So the central bank, in the initial days when the currency was getting developed, you could say that whatever the currency is there, you can go and exchange 1 to 1 with gold. It was linked to some percentage, some amount of gold, each unit of currency. But then over a period of time, it became a fiat currency, that it is not linked to gold. It just because people know about it, just because over a period of people got used to that, they know, they have the confidence that there is some authority behind this. It's a central bank or other entities which are there who ensure that this money will be given back. So that's why they believe it, and then it's no more linked to gold. And that's how it's there, but it's guaranteed by the Reserve Bank, uh, our Indian rupee. Whereas in case of the commercial bank money, it is the guarantee of that particular bank that is there. There are further complications which I will not go into, because then you have a DICGC guarantee, deposit insurance is there. For example, up to 5 lakh rupees, whatever money you have in your bank account is guaranteed. There's an insurance which is available, but then there's a concept called oneness of money. You believe and take that money, use that money, which is a commercial bank money, because you know that it will be converted 1 to 1 with the central bank money. It is converted. So that is the basic concept, and that is a difference between cash and a commercial bank money. I think I can discuss this because these are all MBA students who are discussing banking technology, because otherwise, when we discuss with the general public, we straight away come to the point as to what is like at the high level app level discussions, but these are some conceptual level discussions which I wanted to have it at the start. Now the second point which I would like to ask you, what is the difference? So now you know the difference between cash and the commercial bank money, using either internet banking, mobile banking, or any other things. But then now you are aware, how many of you are aware that there is something called digital currency, central bank digital currency? How many of you are aware? Or rather, I would ask other way, how many of you are not aware that there is a central bank digital currency out there? Not aware, not aware. Can you raise your hands? Yeah, so there are some people who are not aware that there is a central bank digital currency. So let me tell you the central bank digital currency pilot. Pilot means that it is not a full and final launch. It is somewhat experimental. It was launched on the 1st November 2022. It was launched, the wholesale pilot, and the retail currency, what we're talking about, the central bank digital currency was launched on 1st December 2022. Almost 2 years have already passed. And there are various banks which are participating in the pilot. So there is a central bank digital currency which is there. The physical notes which you keep in your purse and wallet is now available in digital form also. and you can use your transactions. Now becomes the complicated part. When you are able to differentiate between the cash and the digital money of the banks, then the first part gets answered. But what about the digital money, the central bank digital currency, and the uh, the digital money of a commercial bank, UPI, internet banking, mobile banking? Now, what is the difference between these two? Yeah. So, on accounting basis, what is the difference? Accounting basis, what is the difference I just mentioned to you? So, CBDC is a liability of RBI, just like physical cash, whereas the commercial bank is a liability of the concerned bank. Okay, that is one, but both are digital. Now, next what? Next, what is the difference between these two? Okay, so that is the difficult question to answer, that what's the difference for the end user. For the end user, you will find that you will be able to transact digitally in the same way as you do with your other digital apps, UPI apps, to pay to a merchant, to pay to any other person. You are able to do, because the CBDC will appear to you as an app in which currency is stored in token form, and you can use it for making payment to a similar way. For the end user, it does not matter much. So from that point of view, let me make it clear. Then the question is, what is the use of CBDC? So the use of, when a central authority like a Reserve Bank as an apex body considers about the availability of various the payment options in the country. So over a period of time, a lot of steps have been taken, of course, from physical cash to central bank money to payment systems to UPI and whatnot. Now CBDC is considered as the next step in that evolution. So it provides an alternative way of making payment using central bank money. This is apart from what existing options which are available to make payments using internet banking, mobile banking, now UPI. So this is the next way. And the way it is different because of the technology it uses, it is possible to have some added benefits to this central bank digital currency. What are those? That is having something called programmability, something called offline functionality. So programmability means that you are able to put some features which defines the end use of that particular money when you transfer to someone. You put some end use stipulations, which merchant it can be spent, which category of merchants it can be spent, which geographical regions it can be spent, till what time period it can be used, after which it will return back. So these are the things. The programmability is possible using the CBDC. That is one. So now the government, we have now the PM Vidya Lakshmi. I don't know if you are aware, there is something called the PM Vidya Lakshmi scheme, which the government gives the there's what you call the interest subvention for education loans. So for those students who are availing education loan for higher studies, the government gives a portion of the interest. So that is kind of subsidy, way of subsidizing that education loan, so that it's cheaper for the students up to certain amount, and that amount is normally given back to the banks. Now that the recent announcement, the PM Vidya Lakshmi scheme will be made using the CBDC. So there will be a Vidya Lakshmi portal in which you apply for a loan. When the government gives this money, the interest part of the money subvention amount, it will going to individuals, and they will accept it, redeem it. The money goes to the loan account. So that the individual is aware about this feature. They have got interest subvention from the government, which is a subsidy, and the banker is assured that all the claims are getting fulfilled. Otherwise, if the beneficiary does not accept the claim, does not process the claim, the money will go back to the government. So the leakage, somewhat leakage or over claim or under claim of all stakeholders is getting removed. Similarly, for various other schemes like PM Vishwakarma, in which the government gives loans to the artisans and other entities for, and there are end use stipulations. They have to use part of the money which the government has given for buying tools. Now that money can be programmed that out of this total amount, this much money you cannot spend anywhere else but in the group of shops which are classified as merchant category, which is classified as artisans. So this is one other example of end use. There are various other projects which are going on, which I will not discuss right now, but the various projects, the government, one major disbursement using CBDC by the government, Odisha government happened in case of Subhadra Yojana. There is a Subhadra Yojana in the government of Odisha, which they give to women from 18 to 60 years every half year, 5,000 rupees. So the government used CBDC partly for these kind of transactions. So you can see that the programmability feature at the sponsor level. Now, the corporates can also use the CBDC. Apart from the government, the corporates, even the university, when it is giving funds to the students, which can be spent only for food purposes, coupons. They have to spend only for tuition fees or certain elements. It can be programmed and ensure that the money is used for the intended purposes. We have a use case in which a bank, I can name the bank also, SBI, came up with a tenant farmer use case. So the tenant farmers are those farmers who do not own land, but they get the land from the owners and do all the cultivation part themselves, but the land records are not there in their name. So they do not get the loans from the banks. Banks are reluctant to pass on the loan because they're not sure whether the end use will happen, not happen, and all. So then the SBI, discussed with us, and they launched this tenant farmer in scheme in one or two states, Andhra Pradesh, Odisha, wherein the loans are given to tenant farmer using CBDC, which is ensuring end use stipulations. So these are just for the example. The government, corporate, banks, all of them can use programmable CBDC. Now, user level programmability is also possible, in which you and me having a CBDC wallet, when I give a money to someone else, so that that person uses only for the specific purpose. Suppose if I give to my child and I want my child to have food or something, and not other things. So I'm just saying. These are just possibilities. These are just examples. It's not the restrictions which are there. I'm just saying the possibilities. Now the use cases will get developed over a period of time. Like what kind of use cases, for example, when someone gives money to the driver should be using for FASTag only, not for any other purposes. So all those possibilities, user level programmability is possible. But these features are being tested separately. Right now, not available in the current apps. It will come. I'm just giving a sneak peek into what are the things which are being tested and what is going to come. Another important thing which is there is the offline functionality. So how do you transact digitally in a place where there is no internet, there is no telecom communication? So in such places, in the hinterlands, in the north areas where there is no internet, how do you transact digitally? It should be ubiquitous. The money should be ubiquitous. It should be available everywhere, and people should be able to transact digitally. So that's why we are developing this offline functionality. So offline also there are different models. One is a proximity based model. Proximity based means that you bring the two devices together and the money goes from one wallet to other. The money is stored in the that mobile device, smart card, or whatever is that. There are various form factors like cards, wearables, or smartphones are the major things. Money can go from one wallet to another. It is like a physical cash. When you lose that money, you lose that money, gone. But then it is possible to transact digitally. Money goes from one device to other by using communication channels like NFC, near field communication. It's possible to have Bluetooth. It's possible to have other kinds of technologies to transfer this money from one wallet to another. So that is the proximity based offline. Yeah. Advantage is that if the advantage for the advantage you need to understand what is the advantage in transacting digitally and transacting in cash. अच्छा
So no physical say the transaction is smart. So there is no
no. So what I'm trying to say is that when you have a comparison, what I'm saying is that you have a physical cash right now and you are able to do transaction. What happens if somebody steals your physical cash or you lose your wallet somewhere? Do you get that money? Get. Still you're using cash. Why you're using? So the point is there should be a way of doing a digital transaction also, but without having internet and mobile banking. There should be a way of doing things because digital transactions are easier than cash transactions. Cash involves handling of cash, receiving of cash, storing it, moving it to bank account. It has got a cost at the business end, at the end of the bank, reserve bank, printing cost is there, everything is there. All these costs are there. So digital way is considered to be superior to a cash. So we are trying to find a way in which where there is no internet also we can do these transactions. So one way is to have a technology like LoRa and other technologies which enables to have banking transactions even where regular internet is not there. That is one way. But if it is not possible to have internet, let us have that provision in which we can transact digitally even in such places. But then the downside is that when you treat the cash without an online database, without a central database, money is in your mobile, then uh, the pitfalls. How do you verify that this money belongs to you unless it goes and gets recorded in a central database? So what I'm thinking, please don't be scared because this feature is still being tested and we want to have the best possible technology and the policy mix and the convenience mix for the end user such that there is some way of still getting the money if it is lost, but then some things which are not possible.
I'm sorry to interrupt, because I'm a total layman. That's why I came the way the ma'am mentioned. So kindly consider it as a novice question. It has got nothing to do with that. One, two, as a teacher and as a person who's using money, I have these basic questions. So I'm sorry.
Oh, sorry, ma'am. Did I sound that way? I mean, okay. The problem is that, this is a very, very good question. Actually, in fact, everyone is encouraged to ask this kind of questions because this means you are listening to it properly. Very, very nice. It was a very nice fundamental questions. I think for the benefit of all you have done. Thank you very much. So, okay. So this, yeah.
So it is offline, it's a good thing. You can access the money in India without depending on the third party servers like Airtel. They want to provide me internet without them pay me. So if it is based on application, I can hack it on my phone and increase my own money. Then it's again black money. It is increasing again in the surplus of the
That is very, very good. Again, another good question.
the games. I used to modify the game. They display own coins in the game. What you can increase up to lakhs. Then like happen years too.
That is what is the biggest challenge today. Have a technology, a secured technology, software and hardware, which is cost effective. So high-end phones have a lot of security features in them, but low-end phones or cards to have those security features, which even in an offline kind of scenario is not will not allow that kind of a duplicate money to creep in or increase in value. That is the biggest challenge which is being faced the world over, and that is why the world over till now a fully unlimited amount of offline transaction service is not available for this reason. You understand? So this is the issue, very well pointed out. The issue is there. So those things are being addressed. It can be limited by having a software, as well as hardware secure elements technologically, and having those kind of safeguards in place there, and a technology which is less liable to get hacked. For example, NFC is more secure compared to a Bluetooth. So that is why the choice of NFC. Similarly, high-end phones with security features are much more secure. But can we bring a cost-effective way of having offline solutions? So what I'm trying to tell you is these provisions are being tested. It is not yet finalized. Some of the banks are doing that, but that is a plan. The idea is to have a CBDC just like a physical cash available at all corners of the country, available for all people, so that DBT or any kind of transactions which happen is available for all. There's another technology here also, non-proximity based solution, which still depends on the online kind of technology. So here with the SMS, some message will flow because internet is not there, but telecom network is there. So with the SMS, things can flow, validation can happen, and all that. So that is a non-proximity based solution that is also going on. So now, having just mentioned to you a bouquet of things which are CBDC, which are getting experimented and tested, right now what is available to you is P2P, person to person transaction, which is enabled in your digital rupee wallet. So for those of you who do not have a digital rupee wallet, you may not be able to appreciate so much what I'm saying, but you can always download your digital rupee wallet. There are 16 banks right now which are a part of digital rupee, pilot, and all the major banks are there. So here in your campus, Indian Bank is there. Then you have the HDFC Bank, SBI, and all who are there. So all Federal Bank, all these banks are a part of our CBDC, and you can download the specific banks have specific apps. For example, you are a customer of, let us say, SBI or a Federal Bank, let us say. So you can go to a app store or a Play Store, and you can write digital rupee, SBI, digital rupee, Federal Bank, digital rupee, Indian Bank, and you will get the app. You can download it, and for registration, you have to use the last 6 digits of your ATM card. And then after registering it, you can load money from your bank account, you can load money from UPI linked account, and use it for all your transactions. Like you are using right now, if you are using a UPI app, any of the UPI app, Phone Pay, Google Pay, or anything, you can use the digital rupee app in a similar way when you go and do a shopping, buy some food at the canteen, buy something anywhere by scanning the QR code. So the QR code is interoperable. It is not necessary that the QR code is of CBDC. All the QR codes except CBDC. So you can go, first you can load money in your digital rupee wallet, go and scan anywhere and make payment Secondly, you can transfer money to your friend who is having a digital rupee wallet by putting the phone number. So these are the basic things which are similar to your UPI app, which you can also do with CBDC. So what I will request all of you is that there are quite a few people who are there in this room who did not hear about the CBDC, who did not hear about it. So you can, if you are a customer of any of the 16 banks which are there, can download the app from the Play Store App Store. If you're using Android phone, Play Store. And then after doing a registration, you can go and do some transactions for yourself, test it out. In the coming period, you will have other functionalities coming in. You can test those also. Give your valuable feedback to us, and we will be more than happy to incorporate any of your suggestions in that. Maybe you may face some issues initially while downloading it, registering it. It might so happen, but do let us know to the bank teams which are here. Do let us know to us, and we will make sure that those issues are resolved and you can download and use a digital rupee just like use your banknotes. So I will stop here. And I'm ready to take any questions from all of you. Okay, these are the conceptual things, but one more thing I will mention to you is the progress in the pilot. So the retail pilot, which started in the 2022. Initially, we had just 4 banks in the pilot, and it was available only in 4 cities. So then, going forward, the number of banks got increased from 4 banks to now 16 banks, and the CBDC is available everywhere across the country because you can make payments everywhere. So, and the number of transactions, etc., got increased over a period of time. There is a lot of interest for DBT and other transactions, direct benefit transfers of the government. And all these improvements, the programmability, there are corporates, there are banks, there are government agencies, state government, central banks, which are coming up, and these functionalities are being tested. If you have any questions, I'm happy to answer. And before I wrap up.
As you told about artisans and farmers, so these are the major factors of financial inclusion. So we all know that our economy, the major aspect in our economy is financial inclusion.
Yeah.
So could you tell us about how CBDC will impact the financial inclusion? Like will it impact it in a way or?
Yeah, you're making my answer very simple. It's only good way only. So how it will impact is that, there is the reasons why please sit down. Please. There's a reason why the CBDC was introduced. So what are those reasons? One thing is that there is a cost of printing of these banknotes. The huge cost of printing these banknotes, moving around banknotes across the country. There's a huge cost to RBI, to the banks and all, handling these notes. So then, if the people move from physical to digital way, those printing costs can be saved. Of course, there is an initial cost in maintaining those servers, maintaining those IT infrastructure. But over a period of time, as we scale and more people use it, it will be useful. So the CBDC is going to complement the existing infrastructure which is provided by UPI, provided by commercial banks, internet banking, mobile banking, and provide a alternate source. So it's an alternate way of making payment. If there are, some payment system is not working, this is a payment. That is one. Second thing, these enhanced functionalities which are there, the offline thing will help us to reach out to those places where people are not in the formal financial sector. Understand? So the idea, financial inclusion is also one of the important things. One is saving on the printing cost, financial inclusion, and the cross-border transactions also. for doing a cross-border transactions is costly and it takes more time to get the money. I send the money today to Africa, it might take 2 days to get credited to the beneficiary, or the other way around similarly. So then if we have a CBDC kind of network in a cross-border basis, then it is possible to save in, which is send the money in a more cost-effective way, lower charges, immediate credit, availability 24/7. So this is another benefit, cross-border transactions. So cost of printing, financial inclusion, cross-border transactions, availing and utilizing the technology in a very, very efficient way. For example, cryptocurrencies, etc., are now slowly, people are getting using and transacting. Some people are doing that. So it gains, they're happy when the value of the cryptocurrency goes very fast. But then when it comes down very fast, they lose money. Then they have nowhere to go. There are any complaints about the cryptocurrency, they have nowhere to go. It can be misused, used for money laundering, anti-lawful purposes. So there are issues. So can we have the benefits which a cryptocurrency provided through something which is a credible, guaranteed way of making payment using central bank money in a domestic as well as in the cross-border way? So these are some of the motivations of having the CBDC. Financial inclusion is one of the important things.
I have one doubt. So this is from your perspective, RBI's perspective. Like in case of physical money, you control the circulation through monetary policy and other tools and all. So how does that work for CBDC?
So CBDC, in case of CBDC also, only distributes. There is a two-tier architecture. So RBI, similar way, we are treating it like cash. So when you need cash, where do you go? You go to first is ATM. ATMs are maintained by banks, or you go to the bank counter, branch counter, and withdraw cash by giving a check, withdrawal slip, or some way. So there are other ways of also taking money from Aadhaar-enabled payment services and various other things. But then the banks are traditionally ones who distribute cash. Similar way, CBDC is also distributed by commercial banks. They get the money by debiting their current account. The commercial banks gets the CBDC, they distribute it to you in a digital way. So you have the wallet, you get the money. But still that money is guaranteed and is of the central bank only. So the bank acts as a wallet provider to you here, a technical partner here, but it's a liability of the central bank. Understand? So as far as the monetary policy and other considerations are concerned, it is a different way of giving a central bank liability. Like cash, it's a digital way. So if you want a little more advanced this thing, the impact on monetary policy, I would say that the velocity of money, which is an important component to define the money supply, okay, that might be different for a digital currency compared to a physical currency. So, and those things are being studied. Right now, CBDC is new. So, and it's not huge. The presence is not huge. So it's not impacting. But going forward, when it does impact, we'll have to look at how does it impact the velocity of money? How does it impact the money supply? This is a monetary policy part. Then there is something from the perspective of macro financial perspective also, which means that banks are in the business of taking deposits, giving loan. They do money multiplier effect. They give credit to the economy, which is a very, very useful purposes. It adds to the GDP, contributes to the GDP and various productive things. Now, if the large amount of this money moves from banks to the CBDC, there could be challenges. So we do not want that kind of scenario that huge amount of money moves and all. But for the transactional purposes, so we have placed limit also how much CBDC for this transactional purposes, how much it can be used and all. But given the wide variety of features, financial inclusion, and enability of digital transactions across the country, we want this option also to be available, which each and every citizen of the country, they should be able to download and use it and be aware of this and the banks will continue to do their important function of credit creation and all. Yeah. Thank you.
Yes.
Okay, then, thank you. I will stop here uh, temporarily. And if you have any further questions towards them, because my friend Murli is going to cover, I think, more interesting part about the various fintech entities who are there, what kind of regulations they are going to bring and all that. So I welcome Murli for this. And then at the end, there will be questions which you can always take. Thank you.
The timing of the class. So 9:30 to 4:30. Maybe we'll take some more time. So, uh, respected Vice Chancellor and Dean Madam and HOD Mariappan sir and uh, bankers present, my colleagues and all the students present here despite the weather outside. So as Mariappan sir was telling, this was just crystallized just couple of days ago, this Tuesday to be precise. So, and then I asked him, sir, you had, uh, I think, severe cyclone just a week ago. How is the university? So he said, as it's fine, not a problem, because I. And then I was just remembering that this university also withstood cyclone sometime in maybe 2005. So that is the resilience shown by the university, and that is seen here as well. Yes. So university has seen many such challenges and faced it with flying colors. And coming to today's topic, as it is very difficult for me to take because you are all already experts. In fact, our department is much younger than the fintech course offered by the university. So the department was created to have a dedicated focus for the fintech sector. Before moving on to the fintech, I mean, you all know the nuances and all, but I just wanted to ask someone to define what is banking. I think this is one of the important things which I was taught during my MBA. But if someone can tell what is the definition of banking, anyone? Uh, Now you are all into fintechs, but definition of banking, I think you are not focused that much. Is it business done by the bank? But what is the activity of banking? How do you define it? Lending and depositing money, protecting others' money. Okay, okay. Thank you for that. So, from the banking definition of Banking Regulation Act, so banking is accepting deposits from public for the purpose of lending or investments payable on demand. So, this payable on demand is a very important clause. So, because these are to be paid back to the public or the people who have kept their monies. So, what is fintech now? So, you're all doing fintech course, banking technology course. So, what is fintech? Can anyone define? I think post lunch food is taking effect now. So, what is fintech? Come on. How do you define fintech? Yes, even through physical mode. Digital mode. Okay. Okay. Good. So financial services given through physical mode, but then we also had it earlier also. We had mobile banking, internet banking. So why was it not called fintech? Say 10 years ago, 20 years ago, ATMs were there for a long time. Mobile banking was there, internet banking was there. So why are we calling it fintech? All right. See, fintech is nothing but technology enabled innovation in financial services to provide more business models, applications, processes, and use cases. So, any innovation you do in a financial services is called fintech. So, like I said earlier, fintech financial technology is there from a long time. So it was there till since 1870 of course, as well. So there were credit cards, and then later on there is online banking. There is online fund transfer, RTGS, NEFT. So these were all there from a long time, but in the last recent past, say 10-15 years, there's a lot of innovation technology being piloted, being used. So in case of UPI, so UPI uh, is provided by third party services on top of a digital public infrastructure. So what is a digital public infrastructure? UPI is a digital public infrastructure wherein the third party application service providers can use the service and provide services. So say Google doesn't have any banking license or payment license, phone pay or any other entity doesn't require a license, so they are just using the infrastructure. So these are the innovations which are being piloted. CBDC is one such innovation. So coming to fintech, I'll not cover about much more on that part, but I would like to say what steps RBI has been taken over the last few decades. So, in fact, you might be aware of IDRBT, right? So it is one of the subsidiary of RBI. I'm sure some of you might have visited, or some of you might have done internship. So similar way, we have also piloted NPCI, which has provided UPI, and then we recently have a Reserve Bank Innovation Hub. So what the Innovation Hub does is it will encourage innovation, collaborate with private players, fintechs, or any other technology companies to provide and experiment on some of the services. It can be payments, it can be lending, it can be video verification, it can be KYC. So these are some of the things which can be done through the innovation hub. So in terms of regulation, one distinct thing for fintechs, I want to say is fintechs are presently not regulated by Reserve Bank. Why it is not regulated? Because we feel that it is a sector which is growing, and it is a sector which is innovating. So if you apply rules straight away, so they will feel stifled. So what approach we have taken is through a self-regulatory organization. So self-regulatory organization is nothing but set of rules uh, defined or designed by the members themselves. So like in the university, you have certain rules. So the university, the faculty members, the vice chancellor, or the student representative or the student council will define set of rules which they think it is implementable for a small group of people. But if say government or any other entity advises rules, you will not feel that comfortable. And then there are lot of things which we may not know what happens in a closed environment or a small environment. So it is ideal that the rules or regulations or fair practices are defined by the members themselves. So that is why a self-regulatory organization approach was taken. So it gives an identity for the organization with the Reserve Bank to communicate, and then also discuss the problem, and not just the regulation, So they have other roles like developmental activities, and then they can take different kinds of supports support in terms of legal, in terms of innovation, or in terms of venture capital, in terms of collaborations, in terms of partnerships. So there are a lot of things which can happen through a network. So that is the path which the Reserve Bank has taken presently in terms of the fintech regulation. And another thing which the Reserve Bank is very clear as of now is fintechs cannot lend. So there is no public funds at risk now. So they cannot accept deposits or they cannot lend. So it is a lending and accepting deposits is a very sensitive function, and it will require a lot of safeguards and compliances by the entities. So these are a couple of things which I wanted to say about the regulation. And however, we take different approaches to learn regulation. So what the Reserve Bank looks at looks in terms of regulation is same activity, same regulation. So if someone is into a lending activity or associated with the lending activity, so they will also have to follow the rules which will apply to an entity which lends. So as a principle, we see that same activity we should have same regulation, and our approach is technology neutral. However, we are also starting to look at technology aspects as well, so which I'll come to it later. The other approaches which we have taken is controlled experiment approach. Controlled experiment approach is through we have a regulatory sandbox. So what a sandbox is, it is a closed environment where you can test certain products and services which the entity feels are not presently under the regulatory domain. So they will have to come on board with a regulated entity, say a bank or NBFC, and then say we want to test this product for a period of 6 months, 6 to 9 months. And if the results are positive, then what we'll do is we will either try to provide a relaxation or modify our regulation as well. So in this way, we encourage innovation, and other initiatives are through hackathon. Like someone was telling he can modify the currency of a game, right? So similar way, at a larger scale, we conduct RBI hackathons, which is called Harbinger. So now we are presently in the third edition, where different entities, not just in India, all over the world can participate. And the prize money for the first prize is 40 lakh. And recently we also introduced an all-woman team uh, first prize, which is at 20 lakhs. So hopefully we'll see some of you participate in it in few years once you are into your respective working life. And then in terms of innovations through technology, we also pilot what we call as RegTech and SupTech. So RegTech is regulatory technology, SupTech is supervisory technology. So in terms of supervisory technology is to use technology to help us supervise some of the rules which are being whether they are followed by the entities or not. So one of the projects which we are presently piloting is green lighting of financial apps. So as you know, you are using Androids and iPhones. There are a lot of apps on the Play Store or Apple Store. So you don't know whether they are genuine or not. So how to identify that the app is providing a service which is licensed or regulated. So to identify such apps and see that no unscrupulous apps are being displayed on the stores. So we are piloting a project on green lighting of financial apps. And in terms of RegTech, there is a app we are trying to pilot, which is uh, on on greenwashing. So you all know government of India has issued green bonds. So green bonds are the investments which are used only for activities which are carbon neutral, which help in increasing the achieving the green commitment of India. So there may be some divergence which happen. So in order to address these activities, we are piloting one of the uh, greenwashing pilots, and then other initiatives include digital banking units. So you all might be heard sometime in 2022, so that the government of India and Reserve Bank has piloted digital banking units. So these are fully digital units which will not require help of any bank employee. So you can go and transact, withdraw, deposit, or do any other banking activity in a digital branch. So the initial idea was 75 digital banking units in 75 districts of the country. And then later on, presently it's at 103 digital banking units. And then another project which we are trying to, which we are BDC is unified lending interface. So you all for lending, each bank has its own system, each bank has its own assessment. So and each bank uses different kinds of data. But what if the data which are being gathered are are centralized at one place, negotiated for the system as a whole? So you can have data such as milk pouring data, you can have irrigation data, you can have soil data, you can have crop data, you can have milk pouring data, you can have there are SHG groups, some of their products and services data. So and you can have land record, you can have education, you can have various types of data. So once you have this, it will help the financial institutions to assess the asset profile of the customer as well, in addition to the income profile. So that is being presently piloted. Presently there are over 50 data service providers which we have integrated, and once it is scaled up, it will help the financial entities to get the information at a very cheaper cost, which will help credit delivery in a very frictionless manner, because once you have various types of data, it will help them to cater and design products and services which is suitable to the individual. And when we are talking about data, there's another project which we are presently working on is open finance. So in India, open finance is being implemented through account aggregator. So some of you might have heard what is account aggregator is aggregation of accounts. So it is not just a bank account, but you can aggregate information of your say investments, securities, stocks, pension, insurance, and then say credit cards, and then fixed deposits. So it will give a complete information about your financial profile. So what happens when you are trying to apply a loan? So what generally a bank requires? Can someone say? When someone or individual or an entity applies a loan, what will bank look at? Credit score. Yeah. So to provide a credit score is one area, but to assess the individual, there are a lot of other things as well. So like I said earlier, there are investment, there are bank savings, there are insurance. So which will give a financial profile of what is the asset profile, what is the financial capability of that person. So with this, you can also design micro services or micro products and services, such as micro insurance, intelligent savings, or or wealth management, personal financial management. So there are a lot of products and services which can happen through account aggregator architecture. So one important thing in the account aggregator architecture is data. So data is the customer is owner of the data, and the architecture provides that the data is used only with consent for a period of time which is defined by the customer himself. So and then the duration is also set by the customer. So that is one important aspect where the account aggregator architecture is managed through consent manager. So the consent to share the data is implemented by the account aggregator. So there are presently about 13 account aggregator, and there are already over 700 entities in the architecture. So there are financial information providers, it can be banks, NBFCs, and then account aggregator, and then financial information users. So it can be personal financial managers, it can be insurance companies, it can be wealth techs, uh, uh, it can be pension fund managers. So that is with respect to the account aggregator architecture. And then coming to, I think, crypto, my colleague had already shared you some of the concerns. In terms of crypto, the risk is it is not backed by any asset. So generally, central bank currency. So someone was telling that on a rupee, it is guaranteed by the governor. So it says, I promise to pay a sum of rupees, and then there's a signature. So that is a written commitment, and there's a logical backing as well. So all the currency which is in circulation is backed by either gold or foreign securities. So it is not issued at the wish of the governor, right? So but for a crypto, it is not backed against anything. So the value which is the prices or the rates which you are seeing now, it is purely speculation. So it will create in the short term volatility, and there are consumer protection issues. So if there's some financial mishap happens, there's nowhere to go. So, and it can also, in terms of systemic issues, it can be used for money laundering, terrorist financing, market manipulations. So these are some of the concerns with the crypto assets. In terms of financial stability also, like someone were telling, how do you implement a monetary policy? So monetary policy can be implemented because we know the market has central backed money. But if there are funds which are not backed by the central bank, how do you get them implemented? So you can only control a signal for people who are on the road uh, with the vehicles. But if people are trying to bypass through some other route, so it's very difficult to implement the monetary policy. So those are some of the concerns with respect to the crypto assets. So I'll stop here, and if there are any questions, we'll take, and then any specific thing which you want to discuss, I'll try to respond, and followed by that we'll have a quiz, and the prize money will be credited to your respective accounts in CBDC. So we encourage you to start using them as well. So any questions? Thank you.
So you can have your mic. You can throw your questions another 10 minutes, because no program will be complete without question answer. Though you have asked a lot of questions in between, but let us have a question answer session. Then once it is over, we have arranged some refreshment for you on the right side of the hall, right? And now it's your time. Conducting next 10 minutes in your hand. We have done our job from our side. Okay, please go ahead.
Yes. Any questions? No, no, See, I have brought in a lot of money to share it with you all. Now, if you don't answer or ask questions, I'll take it back. Or if you're asking the right questions and right answers, I'll be crediting to your account and going. So be very proactive this session and try asking a lot of questions. Now, here we are people who are dealing with technology, we are dealing with fintechs, we are dealing with CBDCs. So all these are fancy words, right? So you might have a lot of questions before also as well in your classes being in as a part of banking technology. You might have learned a lot of technology here also, a lot of CBDCs, a lot of fintechs. Ask some questions. Yeah, please. Ask in mic. Now the quizzes has rules. I'll start the quiz and I'll tell the rules, and then before that, please ask the questions.
Sir was talking about the cost of printing the money. Means the RBI has to print the tax money for us. Now the issue is what money we have in our bank account. These all are printed money deposited in certain bank. And I was using my e-wallet, and there we have to add money into wallet from our bank account. And then the money we are actually putting in our wallet, this is actually pinned money that RBI has to print it. So, and we can also redeem our wallet money into our bank account. So, where was the cost of saving in the money versus saving the?
So, see, how do we save is it is not just about printing the money. Okay. So, printing is one part, but there is logistic cost which is not recorded anywhere. Okay. So, the Reserve Bank presses print, and then it will move to the Reserve Bank, and then it will go to the banks, and then it will go to the ATMs, and then replenishment happens every few days. So, where is this logistic cost captured? Currency chest is maintained. There are people who are providing security. So there are bankers who are accounting every day. There is state police guarding. So there is a hotline fixed. So there is patrolling. So and ATM is there. There is a guard, and then technology of the ATM, power for the ATM. So it is all not getting captured anywhere, right? So
Giving the digital form of payment. So if you add money from a bank, so how can we the money that particular will create the in our bank that we don't that they don't need to fill the camps.
yeah, see, the banking money and RBI money, how it is different is banking money is through leverage. Okay, so I was just telling earlier, banking is accepting deposits for the purpose of lending, right? So suppose you deposit 100 rupees, and then bank or you deposit a fixed deposit 100 rupees for a period of 2 years. So what can bank do is it can lend 100 rupees to 10 different people. Okay, and then they will pay over a period of 2 years. 10 rupees, 10 rupees. So it will make 1,000 rupees. I'm just giving one example because they know you will not ask the money. Okay, so bank can leverage the existing deposit. Okay, so whatever funds or the money given by the bank is a fiduciary money. It is not a fully central bank money. So but in respect of CBDC, it is guaranteed settlement by the central bank. So one to one convertibility is immediate. In terms of bank, you have to go to that bank and then they will convert. So we Reserve Bank takes care that the banks are in a sound state. But then it can also happen that sometimes if entire depositors go to the branch, it will not be able to pay the funds, right? So it will not have so much cash in the branch or even on the digital media. So how the central bank money advantage is that it has immediate direct settlement with the central bank.
There the custodian is the bank. Here custodian is the central bank.
Add to that, what did we say about CBDCs as such? CBDC is a digital representation of a physical cash, right? And economic grows. Economic grows, circulation account grows, everything grows. It means we have to print more and more money to satisfy your needs, right? Instead of printing new money, if I'm releasing things in CBDC, will it be a cost-cutting measure for us?
Yes, sir.
And if you start using the money more, will it be a cost-cutting measure for us as well as the economy?
Sir, actually, I am asking that only.
That is.
When they will start.
Did it answer your question?
Let him complete. Yes, continue. You're telling something.
Actually, I was asking that only. That if RBI start to give out the money differently, not in the post fund. We are only in the
So that's why we are opening the account. So it is a central bank money.
And to the faculties as well, you have even the simple questions, please do ask.
Yeah.
Will RBI reduce printing that 100 rupees? Once he has converted to CBDC, will the RBI stop printing that 100, that 100?
Yeah. Yes. So with the more use of central bank currency, we will stop reducing the volume of printing. And then another thing which you can also notice, we also replenish the soil notes. So whatever notes which you see.
So this it's not one to one, okay? Not one to one. So cumulatively, whatever is the requirement of the currency of the economy, denomination wise, you have 10 rupee notes, 20 rupees note, 50 rupees note, 500. So every year, in some frequency, first the projection is done by the central bank. How much requirement will be there next year for the economy, denomination wise? And that indent goes to a printing press. India Reserve Bank of India has printing press, BRBNMPL in Mysore, Salboni. That request goes, and then based on the indent given, they print it. Till the time it's printed, it is just a stock. It is not money. Comes to RBI based on the requirements. So it's distributed across the country in the currency chest. Based on the requirement, people withdraw money and people use it for their regular purposes, right? So on a cumulative basis, this currency is made available in RBI. So now when more and more people stop using cash for their transactions, naturally the demand will come down. Cumulative demand will come down, which will get reflected in our projection also. Lower printing, less amount of printing means lower cost printing. That note is one. Second thing, lower cost of moving around that money across the country because of security requirements, transportation requirements, all other requirements. So you cannot see one to one. On a net basis, what is the reduction in amount of the physical transactions is what going to impact the overall cost part. Got it?
Any more questions?
But how can this CPTC can access to the EMs?
When UPI is there, when Google Pay is there, when Phone Pay is there, we need CBDC. Anyone can answer. Let's see. It is a quiz question. It will give you a 500 rupee price straight away into CBDC wallet. Sir, Vetrivel sir, who is sitting in the front, who can come and give the name itself. I'll transfer 500 rupees for that. Try now. You being from the banking technology, you'll be able to answer. Right? There is a rule for the quiz also. If two people answer together without using that, my name is Vinod.
UPI is a network that secure that if I have a HDFC account and my friend has a SBI account and I want to send money to me, the NPCI ensures that in the real time from my bank to the NCPI network, the money in the real time can go into this account. While e-rupee is not work like that. E-rupee is a digital form of the cash money, which can RBI later can give us instead of the note money, which we are putting into the banks and we are using by UPI for consulting.
So I have to be and the please will name as the I think replace the answer in a much simpler way. For the payment system. CBDC is not only a payment industry sells too. One is the currency in itself. They convert the cash that you have into the CBDC, that is another business, and we have a payment system. The payment system, right now, whatever is that is an equivalent of it. That is what he was trying to say. Oh, answer you can give the new. Now, any more questions? Come here. Any more questions? Don't feel shy, even though it might be simple, it might end it other questions. Please ask the questions. We have seen there and which are people who are directly dealing with FinTech.
Now, actually, so the CBTC is under the Reserve Bank. So it's safe, right? So compared to other thing, the payment, Paytm, GPay. So compared to other payment systems, CBTC is under the RBI. So as a result, I will go to the CBTC.
Wonderful. Yes, and the ambassador. CBDC is pretty safe because technologically also it is safe. GPay is a private company. It's a third-party app which sits on UPI. UPI is a payment system run by an organization called NPC. It's not sitting over it. Like in FinTech, sir, I've covered that apps and all are not regulated, right? UPI is regulated, and CBDC is a central bank currency, so it is much safer as well. Okay, yeah, your question?
My questions are like, what technology they have been using? So for example,
You see, I will tell you a little. We have recently also disclosed the technology. We are using a technology called distributed ledger technology of the law. I've been learning in your course, right? That technology is being used there. It is supposed to be hash to cryptographic involved. It's being used up. That capitalize it and make it more secure for customers. There are concepts like tokenizations. All these things are also being implemented here where this implementing mechanism for increasing this thing.
okay, so for compound, is there any technology you have been using?
CBDC for cross-border is also being experimented. Peter has already covered it. CBDC is the three verticals, retail, wholesale, and cross-border. Cross-border, the country also has a CBDC. We also have a CBDC. In between, we can put a forex decision mechanism. That's 34%. There are experimentations that are going, especially we can read out for knowledge sakes about BA generation of projects and cross-border experimentation. There will be a lot.
Yes, sir. My another question is like the CBDC for both retail for us, for individuals. How about this business entity? What is the advantage by using the CBDC for the business entities?
CBDC business that's a unique advantage. Token now, token will take on some unique USP. Assume like this. There is a CTS system, which is a check truncation system. There is a RTGS system. It is a real-time payment system. There is cross payment system. There is net payment system. There is mandate payment system. CBDCs can be programmed in all the ways of these payment systems in the program and the smart contracts of the sector. So every transaction can behave in more unique ways. There are atomicity kind of contracts where DVP, delivery business payment, we call it for wholesale transaction, where the asset travels left hand side, token travels, fund token travels right hand side, both will interact and settle instantly. Not like the existing wholesale systems where one goes, other entity confirms, the fund gets transferred the next day. All these things are old age. TBDC has brought in more new technologies include new aspects include where atomicity can be, programmability can be. And the programmability and keeping it blank and clean because I can do any type of program.
I can make a mandate-based payment system. I can make a negotiable instrument-based payment system. All things are possible. We are experimenting with many of these, and hopefully all these comes.
Finally, how about the cybersecurity? Like for example, many of them have been making their own thing and asking the customers to enter the link, and it look exactly like the.
That's what I'm doing. I'm having interaction in the morning mode. The cybersecurity, the moment you enter into digital space, cybersecurity is always involved, right? Cybersecurity is hacking of your personal information and the transaction and even the institution can happen anywhere. How secure we are building it under is in that. They can have cybersecurity. Payment system which have cybersecurity. Even the website which we build can have cybersecurity. We have the footprints which we put on the technology. Cyber safe is what we are believing. Prevents it with much more programming assets. These might reinforce the game. Impactations are the nothing has happened. Facts are something things we can transact.
How about the lending, sir? How you analyze it? How to lend to a customer? Like, finally,
We're using a CBDC for travel CBDC for end use. And you want to make sure that money is given. So you want to be spent for specific purposes. Okay. Let us say the money is for buying fertilizers, for buying for loan. There are stipulations that the money should be used for a specific purpose, buying tools, buying capital equipment, buying certain things. And that is programmed. When the receiver of that money goes and scans anywhere and tries. So let us say for buying a car, just I'm saying. I think it's for buying only car. There are various because the year is marked in the RTO books and those things are there. But part of the for small things, social registration is not available. There, it can be made sure the compliance can be made sure by programming there that the money can be spent to a specific merchant, group of merchant, specific category of items, etc. And geographical regions within these time boundaries, all those things. Oh, that's my question.
Yes, yes. Starting with the first question. Listen, what is CBDC? Someone raise your hand, take the mic and answer and get the amount. What is CBDC? Very, very simple question. What did you understand? Let's start simple. Tell a statement of what is CBDC. Yes, you can take your, yeah. Stand up, introduce yourself and.
Foreign currency stored in electronic format, featured as a liability in the balance sheet of RBI.
Oh, wonderful. You can give the name putting. A very recent question. What is the difference between CBDC and GPay? Just now I told. Then one over there. Stand up.
And get up and pass it. Take the mic pass. And one volunteer to be here. One volunteer.
Yeah. Sir. Scary. Depend and this series which uses UPI for transaction, whereas CBDC is a currency in itself, the electronic form of the digital currency, and is used to do the transactions by RBI. It is regulated by RBI, whereas UPI is regulated by NDCI. Wonderful. I don't know what it means to him. GPay is only a payment system where UPI is an ecosystem covering. Next question. Can someone tell what is proximity based payments and non-proximity based payments in offline transactions? What Celine are explaining. Anyone will do. Anyone. If I'm over there, I'll take the mic and answer and get 500. Easy. Come on. Just guess. Yeah, please. Introduce yourself and answer, please.
Proximity get the two devices together, like closer together. So basically, like here, like NFC based on technology. The non-proximity based is where like the telephone network, like getting the SMS order. So that's how it works in our company.
Great answer. Another interesting question. Who creates CBDC and who distributes CBDC? There was a statement made in between the lecture. Yeah.
What are the details just a minute. What are the
Mobile
details he has?
He's taking, he's a banker.
Okay.
Sir.
Okay.
He's a banker for transfer. So you're taking the mobile numbers as well? Yeah, please.
CBDC is created by RBI. It is just the digital format of the physical money we use. And the thing is like.
Who distributes CBDC? Wonderful. Thank you. Now, turning a little bit to FinTech side, what all UPI apps you are aware of? Phone Pay, Google Pay, Paytm Pay, all these kinds of apps, no? Do they need a license and why? Anyone can answer? Yeah, please. See, your friends are getting loads of money. Try, come on. Yeah.
Yes, sir.
Introduce yourself, ma. Partially right, but still you can get it. They don't need a license because the payment systems underlying it is UPI, which needs a license. They are just a third-party app sitting on UPI and helps the customers to transact money. The underlying technology or the payment system is UPI, which is being hosted and run by NPCI. Funds are not being managed by third party. What happens is, since you're banking technology students, I can say, what happens is a message is being sent by the backend of GPay to UPI, and UPI does all the switching works. And since the message wait, that is a success or failure to the GPay. GPay is just an interface which sits on top of UPI. Okay. Now, can a FinTech lend directly? Any examples that you could think of? The recent one. Can a FinTech like GPay, PhonePe, or SomePay, EaseBus? Stand up, come on. Yes. Meanwhile, if anyone has any questions, also think of and ask.
No, they can't. Why? Because recently Paytm has already lended money and they got banned by RBI. They don't have license to lend money. Exactly. It is not because of that it got banned. Even though it is partially right, you can give the name. But the story underlying is the TPAPs or the fintechs which are on the top cannot lend. The balance sheet risk, which can be taken by the regulated entities like banks and deposit taking NBFs. Next question. Can someone expand SRO, which Murli sir was talking about? Yeah, please. You already answered one. Got 500? No? You ask question, answer. No, it's not like only one question. You can answer multiple questions.
SRO is self-regulated.
Wonderful. What is it?
It's like in case of, let me say an example. In case of mutual fund industry and PE, it is like an example. Mutual fund company, so like that, the members of the industry, they come together and they form their own regulations.
Great example. FIMDA is also an SRO. NASDAQ, FIMDA. We have a phase which was recognized. SRO. Next question. What is this regulatory sandbox which Murli sir spoke about? In between, anyone has any more queries in the interactions or doubts that you had in terms of technology? Be it anything which is very basic also you can ask. Any questions? Yeah, please.
So as we head forward, I would like to ask that we as the students of the banking technology and financial technology, how can we contribute in the further development of the central bank digital currency and its regulation that after this student phase, how can we contribute to this development?
You can think over a lot of use cases. See, I have told what is central bank digital currency's primary USP, which is programmability, right? You can think over and research on a lot of use cases where 1 tier, 2 tier, 3 tier programmability can be there. Let's assume a servant. I give my maid 100 rupee to buy 50 rupee product. Whether she returns me that 50 rupee, I have to keep track. I can program that she can go to a grocery store, spends 50 rupee or what grocery expenditure is, automatically the remaining can come back to me. It's a such use cases you can think of. Not only first tier programming, the second tier programming, third tier programming. After one program gets executed, what is the second program needs to do? These kinds of innovation, because you might be learning blockchain, you might be learning artificial intelligence. How can you integrate AI into this? How can more use cases come? That you can think of. Now, these kinds of innovative ideas you can always reach out through Maripanzer to us. No, I was telling that he was asking how can we contribute. I was telling you think over a lot of use cases can reach out to us through you. Yes. Yeah. Coming to the next question. Tenant farmer use case which Sirin sir was explaining. Anyone can explain what is this tenant farmer use case? Hockey sticking. Otherwise, I'll take the 500. Yeah, madam, please. So others can also benefit.
Actually, use case is that the farmers will not be owning their, they will be renting the lands from the owners and to take the availability of the loans from the this tenant loan.
Yes, for a specific purpose, they can take the lending credits from the institutions. Now, the next question is, yeah, please, ma'am, you have a query?
I have a query.
Yes.
Actually, you are talking about cross-setting. Okay, so when we go for CBDC, so based on cross-setting, printing of notes, everything we are moving to CBDC. So I have one more big question that if this CBDC is being introduced by them in future, whether it will replace the ATM machines.
But ATM machine is a cash dispenser machine. See, to answer it from the crux, the internet penetration, electricity penetration, the telecom penetration of India stands around 30, 40, 50, 60% at max. Can we use digital transaction for the remaining 60%? No, right? They need cash. We cannot replace that because those remaining 40% primarily depends on cash. And second thing is there are offline technologies, as Surinder has already pointed out, which are in the process of development. Now, once end-to-end offline without use of any of these technologies or the networks which are there is completely made, then I think at that point in time we can think over whether replacement will happen completely. Yeah, madam.
So for example, in rural areas, what is the measures or what is the strategy you are following to promote the cities? Because people who are in layman perspective doesn't know how to use. So now anywhere they go use the GPay, everything, even as
Surinder has told about one concept, right? What we are doing is they are anywhere and everywhere using UPI. How they are using UPI? QR code. We have made at the back end the QR code of UPI will be interoperable with that of CBDC. So you can simply scan it using CBDC app. It will automatically land in CBDC transaction. So there is no culture shock when you think about UPI and CBDC. Both QRs are interoperable. No need of keeping 2-3 QRs for CBDC one, UPI one, all these things.
A small request to the guests. So as a faculty, I would like to give some opportunity for our students for internship or some ideas about the needs of the Reserve Bank of India projects which is related to banking. So that I can the project also it comes to the economy.
Reserve Bank from time to time gives internships, so we will share those details to Mariappan sir, through which they can apply and then.
You can always try on new technology. In your banking technology, harp on technology part. What all innovations can come? What all hybridization can come? See, GPay came up with a product where FD can be issued through the GPay. Right? It's a hybrid product. It's a banking technology which was used by GPay. Banking technology also are being experimented. There are AIs, there are quantum computing which are being talked about. So we research on those concepts, bring all these things to our desk. We're very happy to have it. Yes, madam. There are a lot. How many of you are aware of chat GPTs? See, everyone are aware, right? Build something which is more fancy for banking. We'll be happy to take it. Even I believe some of the premium institutes are also working on such technologies. And now, a couple of yes. Yeah, please. A couple of last questions I have. Please.
Sir, nowadays physical money is declining. Most of them are using digital money, like we are using UPI and we are introducing also. Like, so what would be the political party's influence in this?
Political parties influence. Yeah, you're landing me in some troubled area.
Because now, I think that BJP is having a BJP regarding the like BJP is going like they lost 10,000 crores, like even though it was controlled issues like CFPI and controlled by Election Council of India. Yeah,
we'll take this question one-on-one personally after this program is over. Okay. Now going back to the questions. Bank of India launched CBDC retail pilot, which Surinder just told. That person with the bandage in hand. Justness. Yeah, you? Is the right answer. See, I'm asking so simple questions so that I can give away the money, but you're not answering. Come on, be enthusiastic. A couple of more last few questions which I have. Which of the following is not a motivation for CBDC? One, financial inclusion, reducing settlement risk, number 2. Number 3, supporting significant physical cash reduction. Number 4, efficient real-time, supporting significant physical cash usage. Number 4, efficient real-time cross-border transfers, which is not the, yeah, madam, please. Yeah, and Mike.
reducing physical.
Yeah, right. You can give the name and what is CBDC? Is an asset? Is it an asset of RBI? Is it a liability of RBI? And that goes to me then. A couple of questions. That's it from my end. So you can take over. Hope you all enjoyed this. Thank you.
Thank you, speakers, for your wonderful session. Now I call upon Ms. Vishnu Priya from first year MBA BT to give away the vote of thanks.
Good afternoon, everyone. On behalf of the Department of Banking Technology, Pondicherry University, I feel honored and privileged to deliver the vote of thanks for today's special program on emerging trends in FinTech and CBDC, organized in association with Reserve Bank of India. I would like to express my sincere thanks to our esteemed Vice Chancellor, Professor K. Tharani Karasu, for gracing this event with his inaugural address and continuous support for academic excellence. I gratitude to our distinguished speaker, Sri Sirin Kumar, Deputy General Manager, RBI Mumbai, for sharing valuable insights on the latest trends in central bank digital currency. Sri Muralidhar Manchala, Deputy General Manager, RBI Mumbai, for his enlightening talk on the emerging trends in FinTech. Your words have inspired us and provided a fresh perspective on how technology is shaping the future of finance. A special thanks to Mr. Venkata Subramaniam, Zonal Manager, Indian Bank, Mr. Vinod Kumar, Assistant General Manager, RBI, Mr. Ravi Shankar Sahu, Deputy General Manager, IOB, for gracing this occasion with your presence. And also, I like to thank our Dean, School of Management, and special note of appreciation to our Head of the Department, Dr. V. Mariappan Sir, for his guidance and leadership in organizing this program. To all the faculty members of School of Management and students who contributed to making this event a success, thank you for your dedication and effort. Your teamwork and coordination have been commendable. Lastly, I thank each one of you, the audience, for your enthusiasm and keen interest have added great value to today's discussion. As we conclude, let us take the knowledge gained today and use it to explore and innovate further in the fields of FinTech and CBDC. Thank you all and have a wonderful evening ahead.
Normally close the session, I request everyone to raise for the national anthem.